Heady gains in US equities power up stocks with advances far outstripping declines. IT and metals lead the charge while consumer discretionaries drag.
IT stocks rally on the back of a strong rebound in global tech names. HCL Tech's transformation client win and TCS results today are the other cues supported by now more reasonable valuations.
Tata Steel and JSW Steel rise in positive volume trends while Title skids on valuation concerns despite a mostly healthy quarter. Paytm's healthy growth and RBI not for its payments bank MD provide a boost.
The Palm Secretary tells CNBC-TV18 that the government and LIC will eventually exit ITBI Bank and that the mode of stake sale in ITC by SUTI has not been decided. He added that exemption to PSUs from minimum public shareholding norms will be on a case-by-case basis and only for a specified period.
Even as lenders weigh launching a second auction round for Reliance Capital, bidder Torrent files a fresh plea in NCLT to block the move. CNBC-TV18 learns from sources. The tangle will likely delay the resolution.
Hello and welcome. You're watching us here on Halftime Report. I'm Manglam Malu, with me Sonal Bhutra. It's looking good for the markets. In fact, we saw a bit of a gap up opening, not as much as the SGX Nifty was indicating. And from then on, we continued to build on to those gains. At the high point of trade this afternoon for the frontline index, everyone was hoping for some support coming in from the Nifty Bank. Well, that came by a little too late. The Nifty Bank is sitting with a gain of almost 500 points right now. But the bigger joker in the pack today was the IT pack. So the IT sector supporting the index through and through after being an underperformer for almost 12 to 14 odd months. The mid-cap index just about 0.8% higher. Hi, Sonal.
Hey, Manglam. Yes, that's a well-rounded up action that's happening in our markets today. And if we look at some of these stocks which are at the day's high as we speak, so it's the banking space which is really doing very well. So we have Kotak Mahindra Bank, which is higher in trade today. It is at the day's high. IndusInd Bank higher. Reliance Industries is the other one, which is supporting Nifty and House. So a 260-point uptick on the Nifty, and it's much better than what the SGX Nifty was indicating. Of course, the global excitement is something that we are also seeing in our own markets as well. Let's do one thing while we are talking about markets. Let's also talk about an outperformer today. Texmaco is on our radar. It has been buzzing stock up 75% in last 1 year. A fact to note, Mr. Rakesh Tripathi, who's the new MD of the company, was to join on January 2nd, but he could not for personal reasons. He has not taken the charge yet. So let's get in Mr. A.K. Vijay, who's the CFO and ED at the company, joining us now to discuss the business outlook and more details on the same. Mr. Vijay, good afternoon. Thank you so much for joining us. Well, before I do talk about the stock outperformance and what's happening as far as business fundamentals are concerned, what happened as far as the joining of the new MD is concerned? It says that it was because of personal reasons. What's happening exactly here?
Yeah, basically, good afternoon. Mr. Tripathi was to join and he requested for some more time to join. And later on, he said that because of his personal commitment to move out from the existing where he is located now to Calcutta was getting challenged for his family and requested in case we can consider that if he is allowed not to join at that. And so accordingly, we said that then the position will not remain open. And clearly then accordingly, he is not joining and we are now running with the existing strengths and now we are running pretty well, in fact, rather, if you see. The performance by the company is moving around.
Right, but a lot of hopes of smoother, more efficient running were pinned on a new professional joining. I remember a lot of analysts asking you this question in your conference call, etc. as well. But now that this hasn't happened, are you still looking for a new MD for the company?
Yeah, we will be open to that because basically the people who are running the show at this point in time need to have a replacement or rather have to be a person who can succeed to him. So we will be looking for, but it's not an urgency or rather such thing that it has to be done yesterday or today.
Okay, all right. So we'll, of course, touch base with you when there is an update on that one. Mr. Vijay, let's talk about business now. So production level of 300 wagons a month, and you expect it to go to much higher levels. That was the last commentary that we saw. Can you tell us what is the current production run rate? What is the maximum run rate that you're expecting, and by when can you achieve it?
Yeah, unlike the other wagon builders, we need to be actually required to make the prototype, and that is why we took some time to make, where all of the wagon builders can go straight away because they were doing those kind of wagons. So today we have done the prototype sometime in the month of August. Thereafter, we start picking up the production. September itself, we have crossed the level of 300, and gradually now we are stepping up the production, and production is likely to go to our original levels, which we were actually doing about 600 in good old days when Texmaco was basically supplying the maximum quantity to the railways. And we expect to achieve. Our mission is much higher, but yes, immediate target is achieving levels of 500, 600 in immediate future.
All right. What is immediate future? If you could, quantify the time. I mean, is it?
That is before we end the year.
Okay, before the end of this year, you plan to move from 300 wagons per month to about 500 to 600. Can you give us a sense of the updated order book? Again, like the end of the previous quarter, your order book was close to around 9,300 crores, but you were L1 in a few orders, etc. as well. Can you give us what the updated order book stands at as on date, and what was your order inflow in the third quarter?
This is I think you're talking third quarter.
Yes, the third quarter.
Order intake for third quarter.
Yes.
Yeah, basically the order book is already crossed 9,500 crores, and we are already in for additional order for another 200 crores. So we expect that the order book will be to the level of 10,000 crore rupees before the year is ending. And moreover, the performance-wise also things are looking up. The best part is this thing that the private sector is also now getting into a big demand. And they are coming up in for their huge requirements which are there for their wagons, and which is always an advantage situation whereby if you are not getting the wheel set, which is continues to be a critical item in respect of the rail wheel plant, so that you can focus on the private, which you can depend upon the imported ones. Okay. So that way, basically, we are balancing it out now to make sure that yes, production-wise, we continue to the level which we have targeted about, irrespective of whether the railway wheel sets are available or we have to depend upon the imported wheel sets.
Okay, so in that case, from this order book that you're talking about, how much is coming from exports? And you had a target of 500 to 600 crore in terms of revenues. Will it become better because you are talking about more demand coming in from the private sector as well?
I will not be able to tell you the exact numbers, but yes, it will be better. I can say that much.
But the target of 500 to 600 crore this year is something that you will be able to achieve.
500, 600 crore for exports?
Yes.
So we didn't mention that, I think. We never mentioned the 500, 600. Export is basically, you see, it is not wagon alone. We are exporting a large quantity of our foundry division. And foundry is already crossed 120 crores. It's crossing this year. So that way we are actually on target for what exports we have targeted about. But wagons wise, we are gradually picking up. And this year we will be doing something close to 200 crores.
You had spoken about this number, the potential, in your conference call, and this is taken from
the potential will take time because when the export order we book, deliveries are normally 12 to 15 to 18 months. Okay. So it is not that we also book the order immediately go. We have booked some orders, but they are all for deliveries next year.
And what about Kalindi Rail? I mean, you were improving operationally out there. By when does it, start to contribute to profits meaningfully?
Kalindi will take at least next financial year before it starts coming on the real profit terms, because the track which we have changed and the team which we have now put up over there, they are now focusing more on the kind of projects which can be completed in a short duration and which requires a larger supply portion than the actually on-site work. So that's how basically the track has been changed, and it's working well for us. In fact, the new orders which we have booked, they are all giving me good profits. My money is getting blocked only in respect of the old contracts which we have taken, which were large contracts. And those contracts were basically dependent upon completion of certain milestones and all. And there the issues are not related to us, but then the issues are many which are related to the client also, to the other contractor also. And that's basically delaying the process. Now this process we are setting right. We are getting out of those contracts. And maybe that one more financial year will be required for Kalindi to come out and then do really well about, because the business-wise scenario is very good. Signaling, your even the ballastless tracks, which is required for metro, huge requirements are coming up.
Yes, Mr. Vijay, we do take your point, and we are a little short on time. So quickly, before we let you go, can you please tell us what is the debt figure right now? The last known number is around 887 crore rupees. You raised via rights issue as well in December 2021 for repayment of loans and to fund working capital as well. What is the updated number and what is the target?
See, my long-term debts are very small. It is basically running into the range of over 120 crores. The main debt which is basically there is working capital debt, and depends upon my present production requirements and all these things. We expect that the debt finally at the year end will be something close to 900 crores. And within that, the company will be able to manage well the entire working capital.
All right, so let's wrap it up then. Finally, if you could give us a sense of what your entire year would look like. The first half, you've done revenues of roughly 800 crores with margins of 4.5%. For the second half, what do you expect?
I won't speak on the margin, but yes, the turnover-wise and the overall performance-wise, the next half year will be far, far superior to what we have been doing in the previous half year. So this quarter itself, results will start showing the improvements, and the next quarter will be further better than that.
Okay, all right. We take that point and we'll speak to you again after your Q3 numbers. Thank you so much for joining us and detailing the business outlook and what's happening as far as ground demand is concerned as well. Slip into a short break now. Up next, we'll be focusing on the stocks that are reacting to news updates and a lot more. Stay tuned.
Well, the market's holding around the highs of today's trading session. A couple of mid-caps are now coming to the party. We have Aether Industries, which is up around 7.5% odd, and most of the gains are accumulating in just the last 15 odd minutes. Volumes picking up on that counter as well. So Aether Industries is the one which is swimming into my end right up right now as far as the moves are concerned. Also, watch out for Nitin Spinners. That's the other stock. All through today's trading session, we've seen some up move in Nitin Spinners, and now that too has extended its rally to about 9 odd percent. And a couple of other stocks which are doing well. REC has moved to the high point of trade, and L&T Finance Holdings is the other one from the F&O space which has moved higher. Let's talk about the value add segment now. We're focusing on Bharti Airtel. It's up over 3% in today's trading session after CLSA has a few reasons to buy the stock. Rima joins in with more.
Thanks so much for that. So Bharti Airtel is one of the top picks for CLSA. The target price is at 1,040, which means an upside of more than 25% from where the stock currently is. And they're saying Bharti outperformed last year. It was up 18% while the Nifty was up 4 to 5%. So it outperformed last year. But despite that, they expect Bharti Airtel to do well. So let me tell you 5 reasons why. The first one is they expect the company to lead the tariff growth from here on. Their estimate is that Bharti Airtel's tariffs will rise to 236 rupees by FY25. Remember, towards the end of last year, the company already increased the entry-level tariffs in 2 out of the 22 circles. So their expectation is perhaps we will see more of tariffs. Secondly, they're saying the subscriber willingness to move away from prepaid to postpaid has increased, because currently the tariff differential between prepaid and postpaid is at the lowest ever level. And remember, Bharti Airtel is a leader when it comes to postpaid. So which is why they're saying as subscribers move away from prepaid to postpaid, it should benefit sector leader Bharti Airtel. Third, 5G rollouts and early monetization will add to the upside potential for growth. The fourth reason is they're saying Bharti's consolidated debt, or gearing as it's called, is comfortable at 3x EBITDA. The bank debt is about 25% out of the total debt, and the balance is on account of the AGR-related dues. And finally, the fifth reason is the stock trades at a 10% discount to its 5-year average. So all these reasons combined make CLSA bullish on Bharti Airtel.
Okay, that is an interesting take. Rima, thank you so much for highlighting the details of that report. The other space that is in focus is the steel sector. Tata Steel and JSW Steel, they are trading higher in trade post their Q3 updates. Nigel is here to tell us more. Nigel?
Well, that's right. Tata Steel has delivered its operational performance for the past quarter. And the India business, that's the one that gives majority of its EBITDA. And that, in fact, has done pretty well. The deliveries are up by close to around 7% on a year-on-year basis, while Europe, as well as a smaller part of the business, Southeast Asia, Thailand predominantly, they have seen a bit of a degrowth. But there are a couple of positives in here. I said the India business, well, the deliveries are up by 7%. Keep in mind that exports, there was still a lid out there. Now, in Q4 itself, we'll see some contribution. But the good news is the domestic volumes are up by close to around 11%, in spite of exports seeing a degrowth. Europe, it looks weak, but on a sequential basis, it's up by close to around 5%. So you like that as well. And the management has also said that NINL, which is Nilachal Ispat, well, they're gradually wrapping up, and hopefully they get to that targeted 1 million tons odd. So that's about Tata Steel. JSW Steel, well, they as well have come up with their update. And the total volumes are up by close to around 17%, coming in on a low base. So that's good news. The India business, India part of the business now, that's done very, very well. That's up by close to around 19%. So you like that. Capacity utilization levels as well have improved from the mid-80s to more than 90%. So on and all, well, with the recent price increases, coking coal costs have cooled off a little bit, and the operational performance looks fairly good. Both stocks did well.
All right, Nigel, thanks a lot for that. So those are a couple of steel stocks which are doing well. Let's also bring you the latest in the Reliance Capital insolvency case. The Torrent Group has filed a fresh plea in the NCLT to stop lenders from holding a second round of auctions. Ritu joins in to tell us more. Ritu, what's happening there?
That's right, the lenders of Reliance Capital are looking to vote on a proposal to allow a second round of auction for the company because two of the interested suitors, which is Torrent and Hinduja Group, tried to revise or tweak their offers after the first round of bidding. And we've been given to understand that in this second round, lenders are looking to set the base bid amount at 9,500 crore rupees in net present value terms, which will include a minimum upfront cash payment of 8,000 crores to the lenders. However, if the second round is allowed, it is not just Torrent and Hinduja that will get to participate, but the other two bidders as well, and that includes the consortium of Piramal and Cosmia as well as Oaktree. However, it will depend on them on whether or not they will come in at the base bid of 9,500 crore rupees. But there is another challenge that has arisen where we understand that Torrent has now moved the NCLT seeking to stop the lenders from considering a second round of e-auction because it believes its bid is still the highest, and that is what the lenders should consider. Remember, in the first round, Torrent had emerged as the highest bidder with an offer of 8,640 crore rupees, and Hinduja the second highest at 8,110. But subsequently, Hinduja revised its offer to about 9,000 crores in NPV terms, which Torrent moved NCLT against and got an interim relief because the court asked the lenders to not consider the revised offer until the final orders, which are still awaited. And subsequently, Torrent also tweaked its bid without changing the overall number by offering the entire amount as upfront cash payment. So we'll have to see what the court says now and whether the lenders decide to go ahead with the second round of e-auction.
All right. Okay, Ritu, thank you so much for joining us with all those details. The next stock on our radar is M&M. The stock is the biggest Nifty gainer this morning. It's trading close to its 52-week high levels as well. In our special segment, Inside Edge, Sonia is focusing on the key takeaways from the management interaction she had earlier today. Sonia?
Well, thanks a lot for that. As you rightly pointed out, M&M is now just 4% away from its 52-week high and has been gaining quite a bit of ground. It's the biggest Nifty gainer. Now, M&M is going very big in the SUV electric vehicle segment. They will be starting the bookings of their new electric vehicle, the first electric vehicle from the Mahindra stable, the XUV400. This starts from the 25th of January. Now, M&M has, big plans. They are setting up a 10,000 crore EV plant in Pune, and the management told me that there is the B and C segment, which is the premium end of the SUV segment, which put together have 90,000 units per month in terms of retail sales. Currently, this segment is full of ICE engine SUVs, but they will eventually transition into EVs is what M&M believes, and they are targeting this segment. The first segment that they are targeting is the C segment, which has a potential of 30,000 units per month. Now, M&M says that they are not looking to get into shared mobility or lower priced EVs. The EVs will be in the 15 lakh plus category itself in the premium end, and they are currently gunning for the #1 market share, target. They haven't given any kind of a timeline, but currently they're sitting at 20% market share in terms of revenue market share in the SUV segment, and they're looking to become the #1 player. So large plans in the EV segment, and the bookings for the new XUV400 will start from the 25th of January. In fact, we had a chance to listen in to meet the management. So listen in to what they had to say.
We are not looking to target a lower range because, like I said, the market is really B2C. C itself is a large market. The current C segment market is about 30,000 a month, you said. So that's a large market to, look at trying to drive EV conversion. And even B has a big market. We are focusing on living true to our brand purpose and brand value, which is really to give vehicles which are fun, authentic, adventure ready. And this is that. So when you drive it, you're going to get an experience which is exhilarating. So we don't want to get into the, so to say, shared mobility segment with electric and play in the fleets and cabs. That's not the segment we are playing in. This is personal use for those who are looking for a lot of fun. In fact, the modes are called fun, fast and furious.
Okay.
Yeah, so when you go into the third mode, which is furious, you literally fly.
Okay. I'm looking forward to that with my seatbelt on for sure.
Yeah.
But you tried something different this time, right? 3 months ago in September, you launched it, and then you had these customer experiences that you did for 3 months before booking.
Yeah.
Did that work out differently, and what was the response from customers?
Yeah, so the reason for doing that, it's a new category. We want to spend time understanding, interacting with customers, getting feedback. So we've done all of that. And we feel now is the time to open it up for large-scale test drives and announce the price and then do bookings a few weeks later.
And have you gone from 0 to 100 in 8.3 seconds?
I have, on the test track though.
Tell us a little bit about what the near-term plans are in the SUV space. What kind of market share are you targeting, both in EVs as well as in ICE engines? What are you looking at?
So, we are focusing in, now I'm talking about SUV broadly, we are focusing on what we're calling revenue market share. The reason we say that is our average selling price is roughly twice that of the most other players in the industry, right? So, volume by itself will not always be a representation, and we may be, 1, 2, 3 on volume. Last couple of months we've been a close number 2. 2 months before that we were number 1. But we really think the right metric for us is revenue market share. So we want to be number 1 on revenue market share, which right now is in the region of 19.5 to 20%. On EVs, I think there are many factors which are going to drive penetration. And we've got to be, I think we're going to get a very good response when we open bookings. But then we also got to plan supply chain, delivery, help people get charging set up in their societies and homes. So there's a process. So it's a new segment, and we can't think about it exactly the way we think about ICE.
So are you on track for deliveries by Jan, Feb? Because the supply chain issue is coming back again. There's a little bit of a chip shortage issue. How are you handling that?
We are hoping to do our delivery starting last week of Feb. We'll do probably a first vehicle earlier, and you'll hear more about that soon. So that's the designer vehicle, right? So I don't know if you saw it. We've done a tech fashion show where we have a vehicle developed, designed by Pratap Bose and Rinjin Dadu, who is the top fashion designer. So that's going to be the first vehicle which we'll deliver. And we'll do that first sometime in early Feb, and then start the rest of the deliveries towards the end of Feb.
Well, it's a moment that nothing can go wrong for M&M. It seems like that with regards to the new product launches, etc., the EV, and also they have a two-wheel drive Thar which is on the cards as well, and with the demand that we've seen for Thar itself, that should be a success as well. The stock was a big gainer all of last year and currently at the high point of trade as well. With that, we step into a short break. On the other side, we get the market technicals. Ruchit Jain joins in with some trading strategies. Welcome back. We've seen a bit of a slip from the high point of today's trading session, and that's nothing really to worry about. It's still holding with a gain of almost 230 points on the Nifty. We've given up on that 18,100 mark, and that's an interesting one, primarily because this morning, the option setup indicated that 17,900 to 18,100 is what the street is eyeing as the range for the market. But today, the way the market's moved higher, a large part of the credit goes to the Nifty IT index as well as Reliance. Both of them together have contributed maximum to the gains in today's trading session, and both those indices up around, Reliance is up 2% and the IT index up around 2.5%. The Nifty Bank is something that I'm watching out for very closely, and that's primarily because if any up move was to happen, it has to be now from here, led by the Nifty Bank. And the Nifty Bank currently is at an important resistance zone. 42,632 is where the Nifty Bank is, and 42,665 is where the 50-day moving average of the Nifty Bank is. Once it crosses that, then the path opens all the way up to the 43,000 mark, which is the 20-day moving average for the Nifty Bank. A lot of calls were written on Friday's trading session, and a lot of them have come undone now. So if you just take a look at the way the 17,900 call has panned out, or the 18,000 call on the Nifty, 17,900 call, 35 lakh shares unwound out there for a premium of 250 odd rupees. 18,000 call as well, had a fair amount of writing, and now that's coming in for a bit of short covering. 18,100 is the mark that I'm keeping an eye out on, and that's primarily because we still have around 64 lakh shares in open interest out there. If the market sustains above that 18,100, 150 mark for a long time, then these guys will also have to run for cover. On the other side, the put writers have gotten some confidence, so they are writing the 18,000 put on the market, and they are also writing the 18,100 put. The 18,000 put has a premium of close to around 42 rupees, telling you that 79.50 would be a bit of a support. 18,100 put too has come into the picture right now with about 70 lakh shares outstanding, 75 rupees. So that's telling you levels between 17,950 to 1825 could see some bit of a support. On the way up, however, the Nifty runs the risk of getting into a few resistance marks. 20-day moving average 18,200 and the 50-day moving average 18,300. And in the past, we've seen the Nifty hit a wall around that 18,250 mark. So those are a bunch of numbers that we will watch out for the Nifty Bank. that's about the market F&O and technical setup.
Okay, all right. So let's do one thing. Let's take this forward and get in Ruchi Jain of 5paisa.com to tell us more about the charts and what they're suggesting as far as the F&O setup is concerned. Ruchi, good afternoon. Well, slightly off the highs, but it continues to be a strong day for the Indian markets. What do you suggest? What could the next level to watch out for on the Nifty be?
Yeah, hi, very good afternoon. I think no, on the downside, the price-wise corrective is over for our markets. Because if you look at data, then primarily, FIs had formed fresh short formation to which our markets had seen that correction. But in last couple of trading sessions, we have not seen any fresh shorts coming in. If you look at last week's data, then on Wednesday's session, FIs had about 94,000 or 95,000 contracts on the short side. And on Friday's closing, their net short contracts were around 83,000 contracts. So in spite of that market correction in last two trading sessions, they have not formed any fresh short positions. The long-short ratio, although remains around 40%, but it's good thing that they have not formed any shorts in last two sessions. Technically, we were around that 50% retracement mark of the previous up move on the Nifty on Friday. And considering this price up move in today's trading session, I think no, the price-wise corrective phase is now behind us, and we would head higher in the January series from here on. So we are advising our clients to take a buy on dip approach. Any intraday dip towards that 18,050, 18,000 range should be a good opportunity to create fresh longs, as call writers would be in a hurry to square off their positions in that range. And on the high side, the 50% retracement of this entire 1,000 points correction which we have seen recently would come in around 18,330, and 61.8% would come around 18,460. So these are the levels that we would watch out in the January series. But no, for now, I think the biasness continues to remain positive as the data is not negative and the technical chart structure has turned optimistic.
And individual stocks, how do you play this?
So a couple of recommendations on the buy side. Reliance is taking the leadership, and the way a chart structure is shaped, we have seen that oversold zones from where positive crossovers are there. The price volume action is indicating possibility of an leadership coming in for Reliance in the next few days. So Reliance can be bought around 25.70, 25.75 on minor dips with stop loss below 25.20 for targets around 26.54, which would be 61.8% retracement of the recent correction. And L&T Finance Holding would be my second stock pick, where the structure is quite good. The weekly chart structure indicates that the recent correction was just a pullback move after the breakout. So one can go long on L&T Finance with stop below 86 for probable targets around 98.
Okay, all right. Thank you so much for joining us. So that's some technical ideas which are coming in. For now, we'll slip into a break now. On the other side, we'll get you details on the stocks which are buzzing on the back of their Q3 business updates, and also an insight on the life insurance data for the month of December. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, L&T is the stock which is at the day's high, and a couple of these IT names too, they are starting to pick up even further pace. They were already doing well, and we are seeing some more buying coming in as well. But from the Nifty pack, we have Titan, which is in focus, and from the broader markets, Kalyan Jewellers, because they came up with their business updates for the quarter gone by. That's Q3. Mangam, tell us more.
Well, for Titan, the thing is that the stock is lower on account of valuation concerns, but nothing really to worry as far as their growth is concerned. All right. What we'll do is, meanwhile, we'll just try and get some more details as far as Titan is concerned, but important flashes at the bottom of your screen. This one comes in from Bloomberg. Meta names Vikas Purohit as the India head for the Global Business Group. But it is, the 9th of Jan, which means it is Pravasi Bharatiya Divas, and let's hear the Prime Minister's addressing.
मंत्रिमंडल के अन्य सहयोगीगण और प्रवासी भारतीय दिवस सम्मेलन में विश्व भर से पधारे मेरे प्रिय भाइयों और बहनों, आप सभी को 2023 की मंगल कामनाएं। करीब 4 वर्षों के बाद प्रवासी भारतीय दिवस सम्मेलन एक बार फिर अपने मूल स्वरूप में अपनी पूरी भव्यता के साथ हो रहा है। अपनों से आमने सामने की मुलाकात का, आमने सामने की बात का अपना अलग ही आनंद भी होता है और उसका महत्व भी होता है। मैं आप सभी का 130 करोड़ भारतवासियों की ओर से अभिनंदन करता हूं, स्वागत करता हूं। भाइयों और बहनों, यहां उपस्थित प्रत्येक प्रवासी भारतीय अपने अपने क्षेत्रों में असाधारण उपलब्धियों के साथ अपने देश की माटी को नमन करने आया है। और ये प्रवासी भारतीय सम्मेलन मध्य प्रदेश की उस धरती पर हो रहा है जिसे देश का हृदय क्षेत्र कहा जाता है। एमपी में मां नर्मदा का जल, यहां के जंगल, आदिवासी परंपरा, यहां का अध्यात्म, ऐसा कितना कुछ है जो आपकी इस यात्रा को अविस्मरणीय बनाएगा। अभी हाल ही में पास ही उज्जैन में भगवान महाकाल के महालोक का भी भव्य और दिव्य विस्तार हुआ है। मैं आशा करता हूं आप सब वहां जाकर भगवान महाकाल का आशीर्वाद भी लेंगे और उस अद्भुत अनुभव का हिस्सा भी बनेंगे। साथियों, वैसे हम सभी अभी जिस शहर में हैं वो भी अपने आप में अद्भुत है। लोग कहते हैं कि इंदौर एक शहर है, लेकिन मैं कहता हूं इंदौर एक दौर है। ये वो दौर है जो समय से आगे चलता है फिर भी विरासत को समेटे रहता है।
That is the Prime Minister addressing all the attendants of the Indian Pravasi Divas, the Bharatiya Pravasi Divas, and welcoming all of them. With that, let's get back to stocks. We are seeing a bit of a decline in a couple of these names. Power Grid from the frontline pack has moved to the low point of trade, and as has HDFC Life. Actually, HDFC Life is declining rapidly, currently with a cut of almost 1.5%, but from the highs, it's down about 2.5%. In light of this, we do have a bunch of other stocks which are doing well right now. Paytm is one of them, up almost 4% on the back of their business update. Surbhi joins in with the details. Surbhi.
Hi, thanks for that. So their Q3 business updates looks quite strong. Their value of loans disbursed were up 36% sequentially at close to 10,000 crores. Their number of loans disbursed was also up 11% sequentially at close to 1 crores versus 92 lakhs in the previous quarter. The GMV, which is the gross merchandise value, was up 9% sequentially at 3.46 lakh crores. The monthly transacting users, that was also up 6% at 8.5 crores, and the total devices deployed was up 21% at 58 lakhs. Apart from this, over the weekend, the Paytm Payments Bank has received an RBI approval to appoint Sughinder Chawla as its managing director and CEO for 3 years. So all of this is working in the favor of the stock.
Okay, all right. Thank you so much, Surbhi, for explaining that to us. So that's Paytm in focus. But life insurance sector data for the month of December is out. Yash is here with the roundup of the numbers. Yash.
Well, Sonal, as far as the industry is concerned, decent growth again for the industry. The life insurance industry in the month of December has seen a growth of about 10% up to December, about 31%. Private life insurance companies have seen a stronger growth. December premium at about 15% on a year-on-year basis up to December, about 18% in the retail AP, up about 16%. It's the listed life insurance companies where the problem has come as far as the month of December is concerned. LIC, the December premium is just up about 4%, but because of the good performance throughout the year up to December, the premium is up 40% up to December. The December retail APE for LIC has also grown by just about 3%. For HDFC Life, the December premium is down about 10%. The premium up to December is up about 6%. That also has to do with how the companies performed so far in December. The retail APE for HDFC Life, that's been a strong point. That is up about 23%. For ICICI Prudential Life Insurance, The December premium has grown by about 5% on a year-on-year basis. Up to December, the premium is up 10%. The December retail AP is down about 7%. Max Life Insurance, the December premium has just grown by about 2%. Premium up to December growing by about 7%. The December retail AP is down about 10%. Finally, SBI Life Insurance, that has been the strongest performance in the month of December, and not just comparatively but on a standalone basis as well. The December premium has grown by about 30% on a year-on-year basis. Premium up to December is up about 14%. December retail APE also growing at about 31%.
All right, Yash, thanks a lot for that. Let's get back to discussing Titan as well as Kalyan Jewellers. Earlier, we were interrupted by, the Prime Minister's address on that one. Titan, it was a relatively stable quarter, resilient quarter coming in for them. 11% growth in their jewelry business. This on a base of 37% on a consolidated overall basis. The company has grown about 12% with 111 new stores that they've added. Quarter on quarter, there was a jump of 24% in their jewelry business, again on account of seasonality. And if you account for the 37% base last year, the 2-year compounded growth would be over 23.5%. The company has added about 22 new stores in their jewelry vertical, and the management said that the studded category actually outpaced the gold category, which means that the margins this time around in that business should be good as well. But what was heartening was the way other businesses of the company performed. Watches up 14% year on year, led by their wearables business. Fashion and fragrance and Taneira on a low base, but high growth companies, high growth verticals rather for them. 40 to 150% growth out there. Eyewear and CaratLane, both of them growing anywhere between 10 to 50%. However, the stock lower on account of valuation concerns. The other stock on the other hand, which is higher, is Kalyan Jewellers. That after reporting a 13% revenue growth, pretty similar as that of Titan. The India business for them grew by about 12%. They too have added around 5 new stores, and the growth for them in the non-south areas actually did better than the southern part of the country, and that is one of their bigger triggers. The studded ratio for them improved, and gross margins for them as well improved quarter on quarter. So because of valuation support, Kalyan Jewellers on similar numbers on a lower base is higher by 4%, whereas Titan currently lower by 2%.
Okay, all right. Thank you so much for that, Mangalam. Well, important flashes, right? 19 ships, they are backed up due to grounding of vessel in Suez. And this is something that we saw earlier as well, which led to supply side issues and rising freight rates as well. So that is an important event. Of course, we'll keep tracking that and bringing more details on this one. But for now, we'll slip into a short break. On the other side, we'll get your detailed insight and what you can expect from the TCS Q3 numbers, which are expected later today. Stay tuned.
Welcome back. TCS will be reporting its Q3 earnings today. Rima joins in to tell us what to expect. Rima.
Thanks so much for that. So let me first run you through the big numbers. Dollar revenue growth, 1.65% is our poll. Constant currency revenue growth is seen close up about 1.5%. Margins are likely to expand for the second consecutive quarter, aided by the INR depreciation. So 24.75 is the CNBC-TV18 poll, and the profits are seen up closer to 7%. What will you track? Does the company hold on to its Q4 FY23 exit margin guidance of 25%? Quite likely, because according to our poll in the December quarter itself, they are likely to get to 24.7, 24.8. Will the deal wins continue in the run rate of $7 to $9 billion that they had earlier guided for? The focus on furloughs is going to be very high. Europe and UK exposure for TCS is higher than peers at nearly 30%, and calendar year 23 budget closures, the rate of spending increase, decrease, the priorities will be crucial. And finally, watch for attrition. Industry seems to suggest that attrition has bottomed out, and hiring numbers are also seen as a proxy for future growth. While the sector itself is derated, TCS used to trade at a valuation multiple of 31, 32 times at peak levels. It's come down to 25.5%. Has the slowdown been priced in, or is there more to go? This is what Q3 earnings season is hopefully going to help us and guide us with that. Back to you.
Of course, and we'll keep coming back to you for more analysis on this one, Rima. Thank you so much for bringing us those expectations. With that, it's time for a break. On the other side, Manisha Gupta will join in with Peter Maguire, CEO at Exim.
Welcome back, and joining us on the show now is Peter Maguire. He's CEO at Exim Australia. Peter, hi, good to have you, and a happy new year to you. And what a strong start for many of these commodities, including the industrial metal prices. Last week was choppy, but this week, by now, we do understand that we are trading in positive for most of them, especially copper and zinc, 2 to 3% of gains already. How are you reading that?
Well, happy New Year, Manisha, and lovely to see you. Greetings from Sydney. Yes, it's been strongly bid up. Last week was dynamic. That good news story coming out of China, of course, And the overall theme running across, I think, a confidence level is one of bid up strongly. And it's been very evident, as you mentioned, copper's well up and zinc's had a nice run. And don't forget, some of the precious metals are absolutely on fire as well.
Oh, well, absolutely. I'll come to precious metals, but industrial first. And we have seen the decline in US dollar index continue to support. The inventories in any case have been depleting. But do you see that the demand that the markets have been waiting so long to see Q off is finally coming in from China? Or is this still some hope premium or rally that we are seeing?
I think there's a degree of hopium, because you need all of those goods that are finished and manufactured in China need to be sold somewhere. And if you've got recessionary fears engulfing Eurozone and US and big time consumers, then that's going to be a bit of a handbrake. But it is a good sign, Manisha. That's the first sign as far as what it will do to the internal demand in China. And let's just see where we are in a month's time. I'm expecting a little bit of move to the upside before the Lunar New Year, but it's certainly come out of the gates and it's moving very, very quickly. So that may continue, and it's all a good sign for the commodity producers.
So when you look back at the previous year, Peter, every quarter had its own price moves and its own fundamentals to move at. There was one factor that continued to move the markets. What is it that you see in this first quarter? Is it going to be dollar? Is it going to be China? Is it going to be the first US Fed meeting of this year in the month of Feb?
I think first, I'm curious to see how the how the central bankers are in Sweden this week. That's the first sign. Second sign is, yes, China was very, it hasn't been a participant. So now we've got the floodgates open. So that's going to be very, very strong. And that US dollar continues to move down. We're at 103.50. And I still believe there's probably a 102 handle in the next week or so, maybe at the end of next week. So further downside pressure there, Manisha. So, yes, that's going to be a strong push for some of those commodities. And that's always a sign. US dollar down, and these commodities will take a little bit further run to the upside.
Oh, well, absolutely. Yes, below 104 yet again for the dollar index. So what would your favorite pick be as we start this year? Is it going to be among industrial metals or precious metals? Because even as the gold prices for COMEX in dollar terms are trading at around 7-month or 9-month highs, for the Indian markets, we are, inches away from making an all-time high yet again.
Exactly right. Well, yeah, in rupee, of course. So, yes, I still believe that those the gold market and silver especially will run fairly hard in 23. You got 1885, I think it is. I was just looking at the screen about 1883, 1885 for COMEX gold. So, that's strongly bid up. What we've seen in the last couple of months on gold has been electric. And I was just looking at silver. In just over 2 months, Manisha, it's up 33, 34%. So it's had a very strong move to the upside from $18 to $24.20. So, yeah, don't lose sight on little brother, because I think overall, it's probably got more horsepower than Big Brother.
All right. Well, absolutely. Yeah, silver has been more choppy than gold, but what a run-up that we've seen as the year begins for gold and silver, both of those commodities. So if you had to pick one major commodity that you would want to put major investments in, what would that be?
I think you've got to stay on precious at the moment. I'm certainly concerned as far as what rates are going to do, the inflation story, overall market, recessionary fears. And I think that precious has got some really nice upside. So, yeah, it's certainly had a run already, but I think that will continue for a while yet. And 23 could be a good year for precious.
So looking at $2,000 yet again?
Did you say 1,900?
I said 2,000.
Oh, 2,000. Yeah, I think 2,000. I just didn't hear that one. Yeah, look, we'll be at 1,900. I'd say the way it's moving, Manisha, you might be there by the end of the week. But yeah, probably 2,000. It's got its sights on it, and I won't be surprised if it takes that out. It's been almighty trade, and it seems to have a lot of attraction, and a lot of market participants are buying physical and of course paper. But I think the physical market's very, very strong.
All right, bullish and very bullish continuing in case of precious metals there. Thank you so much, Peter, for joining us today. So industrial metals as well as precious metals on the buy side, but gold clearly a favorite there. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.